A very warm welcome to the Q4 FY2024 results conference call of Krsnaa Diagnostics Ltd, hosted by JM Financial. Before we begin, I would like to remind all participants that today's call may contain statements that are forward-looking statements, including, but without limitation, statements relating to the implementation of strategic initiatives and other statements relating to Krsnaa Diagnostics' future business developments and economic performance. While these forward-looking statements indicate our assessment and future expectations concerning the development of our business, a number of risks, uncertainties, and other unknown factors could cause actual development and results to differ materially from our expectations. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Jainil Shah from JM Financial. Thank you, and over to you, sir.
Yeah, hi, good morning everyone, and welcome to the Q4 FY24 results conference call of Krsnaa Diagnostics Ltd. Joining us today on the call are Mr. Rajendra Mutha, Chairman and Whole-Time Director, Mr. Yash Mutha, Joint Managing Director, Ms. Pallavi Bhatevara, Executive Director, Mr. Pawan Daga, Chief Financial Officer, and Mr. Vivek Jain, Head Investor Relations. I would like to now hand over the call to Mr. Rajendra Mutha for his opening remarks. Thank you, and over to you, sir.
Good morning, सभी को मेरा नमस्कार। हमारे Q4 FY24 अर्निंग्स कॉल में भाग लेने के लिए आप सभी को धन्यवाद। मुझे ये बताते हुए बहुत आनंद।
Sir, your audio is not clear, sir. One moment, please. Ladies and gentlemen, please stay on the line while we reconnect. Ladies and gentlemen, we have the management line reconnected, so you can go ahead.
सभी को मेरा नमस्कार। हमारे Q4 2024 अर्निंग्स कॉल में भाग लेने के लिए आप सभी को धन्यवाद। मुझे ये बताते हुए बहुत आनंद हो रहा है कि इस क्वार्टर और फाइनेंशियल ईयर 2024 के रिजल्ट हमारी उम्मीदों के अनुसार है, और मुझे इस बात का गर्व भी है कि 13 सालों में कंपनी ने अपने लिए डायग्नोस्टिक क्षेत्र में और पीपीपी क्षेत्र में एक अलग पहचान बनाई है। हमारे पास आज तक 148 सीटी स्कैन और एमआरआई केंद्र है। 1400 से अधिक एक्सरे सीआर सिस्टम टेलीरेडियोलॉजी केंद्र के लिए हमने इंस्टॉल किए हैं। इसके साथ और 67 सीटी स्कैन और 23 एमआरआई मशीन के टेंडर कंपनी ने जीते हैं और टेंडर के अनुसार इंस्टॉलेशन करने हैं, जिससे कंपनी के पास 250 सीटी और एमआरआई और 1600 से अधिक एक्सरे सीआर सिस्टम रेडियोलॉजी उपकरण इंस्टॉलेशन होंगे। मुझे विश्वास है कि एशिया में इतनी बड़ी इंस्टॉलेशन कोई और कंपनी के पास नहीं है। सीटी स्कैन, एमआरआई और एक्सरे टेलीरेडियोलॉजी उपकरणों के सबसे बड़े इंस्टॉलेशन के साथ आपकी कंपनी को भारत की सबसे बड़ी रेडियोलॉजी कंपनी के रूप में देखा जाता है। वास्तव में आज हम सबके लिए ये गर्व का क्षण है। इसके अलावा पिछले एक दशक से हमने कंपनी पीपीपी तत्वों पर डायग्नोस्टिक क्षेत्र में कार्य करते हुए जनता की सेवा करते हुए विश्वास से इतर डायग्नोस्टिक कंपनियों से अतुलनीय और अद्वितीय बनाया है। इतना ही नहीं, अपनी कंपनी पूरे भारत में अपने बिजनेस और प्रेजेंस का विस्तार करने के लिए लगातार निवेश किया है। इससे भविष्य के विकास के लिए एक मजबूत नींव तैयार हुई है। हमें यह घोषणा करते हुए गर्व महसूस कर रहे हैं कि भारत में पहली बार अस्पताल में कार्यरत प्रयोगशाला को कैप मान्यता प्राप्त हुई है। यह मान्यता कृष्णा की क्वालिटी की क्षमताओं और मरीजों को सर्वोत्तम गुणवत्ता और समय पर सेवाएं प्रदान करने की कमिटमेंट को साबित करती है। हमने हाल ही एमआरआई और 17 सीटी स्कैन सेवाओं के लिए काम शुरू करने के लिए एग्रीमेंट एग्जीक्यूट किया है। यह सबसे बड़े टेंडर में से एक टेंडर है और हमें इसका हमने कृष्णा रिटेल प्राइवेट लिमिटेड 100% सब्सिडरी कंपनी की स्थापना की है कि जिसका फोकस B2B और B2C बिजनेस पर होगा। हमने B2B और B2C बिजनेस श्रेणी में शुरुआत की है और जिन राज्यों में हम मौजूद है और जहां हमने B2C लॉन्च किया है और इस B और B2C मॉडल को जो प्रोत्साहन मिला है, हमारी B2C की अपनी टीम इस बिजनेस को ऊंचाई के स्तर पर ले जाएगी। लेकिन यह एक नया बिजनेस वर्टिकल है और इस बिजनेस तक पहुंचाने में कुछ समय लगेगा। हम B2C बिजनेस में अधिक प्रगति करने के लिए अपनी टीम और आगे बढ़ाएंगे। अब आपको हमारे राज्य में अपडेट देता हूं। जैसे कि आप जानते हैं कि मामला उच्च न्यायालय के अधिकार क्षेत्र में है, अंतिम आदेश की प्रतीक्षा है। हम जानते हैं कि निर्णय के लिए काफी समय हो गया है। फिर भी मैं दोहराना चाहता हूं कि कृष्णा डायग्नोस्टिक विकास की चरण में है और हम राजस्थान के बिना भी ग्रोथ को हासिल करेंगे। अब मैं का कॉल आगे की जानकारी के लिए यश मोता जी को ये सौंपता हूँ।
Thank you, Mr. Rajendra. I am pleased to present the impressive performance of Krsnaa Diagnostics Ltd during the fourth quarter and for the financial year FY24. Our FY24 revenue reached 620 crore rupees, signifying a commendable 27% year-on-year growth, and we maintained a healthy EBITDA margin of 24%. As a relatively young company established in 2011, Krsnaa Diagnostics has experienced hyper-growth driven by our strategic investments in setting up diagnostic centers predominantly under the PPP model. Considering and the evolution of the PPP model in the diagnostic space, the major capital expenditure has happened in the last few years, due to which the complete potential of the investment is yet to be realized. As you can see in our presentation, the centers have matured. That is, those centers which have been operational for at least 3 years period have demonstrated a much higher EBITDA, wherein the centers which are in for less than 3 years have moderated, just break even at the margin level. The centers which are operational for a period of half years have demonstrated negative margin, which is largely due to the initial ramp-up phase, wherein as we begin up in a particular project, the cost of the manpower, consumption, and other expenses are higher in the initial period and not commensurate to the revenue that is being generated. The ramp-up of this revenue happens gradually. Thus, the investments provide higher returns in years as the projects mature. The investments that we are making today are laying the foundation for a future growth and profitability. We are confident that our strategic approach will yield substantial returns as the projects mature in the years to come. Having said that, brief you about our recent developments. We've also successfully operationalized 10 CT scans in the state of Maharashtra. The remaining 29 CT scans would be soon operationalized, and the revenue projections are expected to materialize from the second quarter of fiscal year 2025. Over the last 3 months, we have successfully established 2 new pathology labs and established 350 pathology collection centers. Over the last 12 months, we have successfully established 15 new CT MRI centers, 25 new pathology labs, and established around 805 pathology collection centers and 63 new telereporting centers. These endeavors have been meticulously aligned with our expansion strategy. As you are aware, we have Dr. Prashant as our CEO, who's looking after our public-private partnership business
along with the B2C initiatives. We had also recently executed the agreement for some significant tenders, including the installation of 17 MRIs and 17 CT scans across Maharashtra, 5 MRIs from Madhya Pradesh, 31 CT scans from Maharashtra, as well as the pathology projects in Odisha and Assam. These projects are currently in various stages of implementation and ramp-up, adding to our existing operational portfolio. Further, with the upcoming projects, the scale and complexity of these new projects necessitated a focused approach, and Dr. Prashant's responsibilities have expanded, encompassing new project implementation, ongoing monitoring, and organizational development, all with a sharp focus on our PPP initiatives. Currently, Dr. Prashant is also helping us in initiating the B2C vertical and the various initiatives under that, which has shown a very promising potential. To support this expansion and to ensure that we capitalize on our B2C opportunities, I am further thrilled to announce a pivotal development in our journey towards exponential growth in the B2C vertical. We are excited to welcome Mr. Mitesh Dave as the Group CEO of Krsnaa Diagnostics Ltd. Mr. Mitesh brings a wealth of experience from his illustrious career in FMCG, OTC pharmaceuticals, telecom, diagnostics, and single specialty hospitals. His proven track record in driving significant financial outcomes, managing large-scale budgets, and overseeing P&L responsibilities aligns perfectly with our ambitious growth objectives. Mitesh brings a wealth of experience from his illustrious career. In his previous roles, he has successfully overseen healthcare businesses with impressive growth rates. With Mitesh at the helm, we are poised to leverage our existing infrastructure to accelerate our penetration into the B2C markets. His strategic vision and operational excellence will be instrumental in navigating the complexities of our global business operations and unlocking new synergies across various segments. The strategic hire underscores our commitment to strengthening our leadership team with top-tier talent capable of driving innovation, operational efficiency, and sustainable growth. We are confident that under Mitesh's leadership, Krsnaa Diagnostics will continue to set new benchmarks in the diagnostic industry, delivering exceptional value to our stakeholders and enhancing our market position. His expertise will also complement Dr. Prashant's efforts, allowing us to maintain a robust focus on our PPP business while simultaneously driving growth in our B2C vertical. This dual approach ensures that we can deliver on our current commitments and at the same time explore new avenues for expansion without compromising on either front. This collaboration will also enable us to leverage our existing infrastructure efficiently, minimizing redundancy and optimizing resource utilization. Further, as we welcome Mr. Mitesh Dave, we are also conscious that we might have to build a team to support the B2C foray. However, we are committed to maintaining financial discipline. We are confident that with this enhanced leadership structure, we will continue to achieve impressive growth and financial outcomes. Furthermore, we have recently secured a significant agreement with the Maharashtra government for the installation and operation of 17 MRI and 17 CT scan machines. This almost 12+ project underscores our leadership in the diagnostics field. These equipments will be installed in a phased manner over the next couple of years. This ambitious initiative not only strengthens our strategic partnership with the government, but also solidifies our position as a pioneer in advancing diagnostic infrastructure in India. To brand building by prioritizing convenience and digital investments, enhancing our test menus with cutting-edge technologies to deliver precisely and timely results. These strategic initiatives are designed to expand our network and ensure unparalleled customer service for our consumers. With a robust pan-India presence, Krsnaa Diagnostics is uniquely positioned to capitalize on the burgeoning growth trends in the Indian industry and the healthcare industry. Our consistent revenue growth is a testament to a successful expansion across all regions, whether it is north, east, west, and south. As part of a relentless pursuit of excellence, we are continuously exploring new testing capabilities to meet the dynamic need of our patients and customers. We are aggressively integrating state-of-the-art technologies and analytical tools across the critical departments such as pathology, radiology, supply chain, ensuring we deliver diagnostics Our extensive presence across Tier 2 and Tier 3 cities, facilitated by successful public-private partnership models, position us at the forefront of leveraging opportunities in these rapidly growing regions. While many of our peers are just beginning to focus on these markets, Krsnaa Diagnostics has already established a strong foothold, providing us with a significant competitive advantage. This strategic positioning allows us to meet the healthcare need of the underserved areas, driving both social impact and business growth. The Indian diagnostic industry continues to show promising growth, and Krsnaa Diagnostics stands at the forefront of this transformation. We are on the cusp of limitless possibilities, and we are determined to adapt, innovate, and excel. Plans are designed to unlock new opportunities and drive expansion, ensuring we continue to positively impact lives and contribute to the advancements of the healthcare industry. Now, to brief you in details about our financial numbers, I would like to hand over the call to Mr. Pawan Daga.
Thank you, Yash. Good morning, everyone. I present the financial highlights for the quarter ending in 2024. In the fourth quarter of FY24, our total revenue from operations experienced a notable upsurge, reaching INR 166 crore, making an impressive 25% year-on-year growth. Shifting our focus to operational performance, our Q4 FY24 EBITDA reached INR 45 crores, signifying a commendable 28% year-on-year growth. And we maintained a healthy margin of 27%. Additionally, our net profit amounting to INR 19 crores with a corresponding margin of 11%. The margin has improved due to better operational efficiency and center maturity. In FY24, our total revenue from operation reached INR 620 crores, making an impressive 28% year-on-year growth. Our FY24 EBITDA reached INR 147 crore, signifying a commendable 18% year-on-year growth, and we maintained a healthy margin of 24%. Additionally, our net profit amounting to INR 57 crore with a corresponding margin of 9%. During this quarter, our receivables stand out to be 68 days, excluding receivable from Himachal Pradesh. We experienced a significant increase in receivable from HP, leading to higher working capital costs. The ramp-up of project in Odisha and Assam, along with the outlay in Maharashtra City Scans project, has further impacted our EBITDA to cash flow conversion. The delay in receivable, mainly due to the election-related activities, is a temporary challenge, similar to what we faced during the FY2019 election, wherein our receivable days were comparable to around 98 days. Despite of these temporary setbacks, which are typical for our business, Krsnaa Diagnostics is laying a strong foundation for future growth. Our current investment in the project and infrastructure are crucial steps towards our long-term vision. We would like to further update you that we have started receiving the payment from this quarter onwards. This quarter, our depreciation expenses is slightly lower. This adjustment results from a necessary review and revision of our accounting estimates, specifically the useful life and the residual value of our assets, considering that it had been some time since we last overlooked such a comprehensive review. And this revision was essential to align our accounting practices with the current condition and the uses of our assets. This prudent adjustment ensures our financial statement more accurately reflect the true and fair and the lifespan of our assets, providing a clear picture of our company, financial health and sustainability. Also, Board has recommended a final dividend of rupees 2.50 per share, which is 50% of payout. Thank you. We can now open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Yeah.
The first question is from the line of Bala Murli Krishna from Oman Investment Advisors. Please go ahead.
Hi, good morning, Yash. I have 3 queries. First of all, on the one bookkeeping question regarding this fees paid to hospital, it was decreased drastically on QOQ from 18 crores to 9 crores. Could you please explain?
Yeah. So the fees to hospital comprises revenue sharing arrangement that we have with our B2C partners. So, depending on the outcome of the performance obligations that these partners have to deliver, accordingly, these revenue sharing are evaluated, and therefore you see a reduction in this particular quarter.
So going forward, how it will be? It will be maintained in the same level, or we can expect any up now?
No, so in the, as the business ramps up, it might be slightly higher than in this quarter, but it won't be significantly deviating from, if you look at it on an annualized level.
Okay, sure. And regarding this Rajasthan tender, any update on that one?
Yeah, so like our chairman mentioned in his speech, we are equally, awaiting for the outcome of the, High Court matter. And as and when it comes, we'll certainly update everyone. The hearing is expected to be there in the next couple of days. So, we are equally watching the space and we'll keep you posted.
Yeah, and regarding this pipeline tender, so I think we have applied, we were talking about the tender in the Andhra Pradesh since some 1 or 2 quarters, but is there an outcome and any significant tenders we have quoted for which we are waiting for the results?
No, so as of now, there are a couple of tenders which are upcoming as well. However, having said that, until the election gets over, all these tenders will be on hold. And hopefully after the election gets over, we'll be able to give a more clearer picture.
But is it possible to name few tenders which we are already participated and waiting for the results?
No, I won't be able to comment on that as of now.
Yeah. So one more thing on the execution side, I see that only we have done out of this EP 8 CT scan missions, we have done only 5, and we have added only 1 mission this quarter, and as well as in Maharashtra also. So how we can come in the upcoming quarter, how this will be speed up, and any issue in the UP, because it's almost, I think, 2 years old tender. In 2022 we have won that tender for the 8 scanning mission. So we have not yet completed that entire tender, deployed equipment. Is there any issue with that one? And in the upcoming quarters, how will be this execution pace? How will be the pace?
Yeah. So, see, typically in our business, after the tender gets awarded, we have to receive the site from the respective authorities. Then the equipments have to be procured and installed. So many places where there are delays, these are largely on account of, such matters where either the site has not been handed over or there could be issues such as electricity not there on site. So these are typical procedural delays. But, from a compliance perspective, we are all geared up to deploy these equipments at the respective centers. And during this financial year also, there are various of these equipments which are in the pipeline along with the timelines. And from a procedural perspective also, we have, now improved, wherein today we were earlier used to wait for certain of these updates, but now the team is poised to get all the updates upfront and then decide on the planning. So I believe in this financial year as well, FY2024-25, there will be significant additions to our centers.
Okay, that's great. And lastly, on the Maharashtra, so already we have won 39 CT scan tender in the previous years. And now we are at, again, we have 117 MRI and CT scan. So I think we would have captured the entire state, or is there any further scope in this Maharashtra?
Yeah, so if you see predominantly with the 17 MRI, 17 CT and the existing 39 CT scans, we would have covered majority of the entire Maharashtra. Having said that, there are few municipalities and some other public hospitals which are still open. But I think now we have a lion's share in the Maharashtra region as such.
Okay, and broadly, last question.
Maybe request.
One last question. I will exit. One last question. So if we have almost covered a few states, most of 50% of the states in India with the tenders for this public-private partnership. So going forward, is there any further scope from any states which we have untouched, or whether they don't have any public-private partnership? So do you see any scope in the further few more states which we can go for that partnership again?
Yes. So if you see, we are present in states only like Punjab and Himachal Pradesh where we have full services, but rest of all the other states are still open. And again, in the rest of the states where we are present only in select districts or select verticals. Where, for example, in some places we are in pathology, in some places we are in radiology. So there is still an immense potential in our opinion, and there is a significant opportunity that Krsnaa can tap into the future in terms of PPP opportunity. So I believe there's a strong opportunity base for us even in the subsequent months or years to come.
So that's all. Thanks a lot. All the best.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Anshul Agrawal from MK. Please go ahead.
Hi, good afternoon, gentlemen. Thank you for the opportunity. Many congratulations on the
May I request that you use your handset, please? The audio is slightly muffled, sir.
Sure. Is this any better?
Yes, sir. Please go ahead.
Great. Thank you for the opportunity and congratulations on the CAP accreditation, gentlemen. 2 questions. One on our gross margins. I am unable to understand why our gross margins have been declining over the past 4 or 5 quarters. Is this because of our convergence to a pay-per-use model or any one-offs in this? If I can't seem to point a finger on that. Could you help me understand what is the reason our medical consumables are increasing as a percentage of sales?
Yeah, so this is mainly because of the increase in the share of the pathology business, and also the projects of pathology which we have deployed, which is very initial stage where we see calibration QCs are higher at an initial period where we cannot capitalize this cost. So that's why we see slightly higher consumption cost during this financial year.
So we expect this to stabilize at where exactly gross margins would be stable according to by when and at what level?
By Q1 or Q2, you see this like a gross margin or the consumption level will be stabilized.
Okay, and any approximate levels or broad range on that?
This will be 78% kind of a gross margin you can see after the stabilizing of a gross margin.
Okay, and would our convergence to the pay-per-use model, which if I remember you had mentioned in the Q3 call, would that also lead to lower gross margins in the future?
So on the pay-per-use model, this model will not impact your gross margins, but they will impact the EBITDA margin. So we've started the pay-per-use model with some of our partners, which will eventually help having a better ROCs going forward.
Got it. Very clear. Thank you. Second question was on the B2C business. While I understand we are investing a lot in terms of managerial bandwidth, etc. What I wanted to understand is, I believe our aim is not to have any differential pricing for B2C services. Would that be correct, or is there any change in strategy there? Would we have differential prices for B2C model?
So from a B2C pricing perspective, of course, the pricing will have to be differential, considering the fact, that this will be a differentiated service, though it leverages our existing infrastructure. But considering, for example, home collection services as well as other, it will be differentiated, but it will still be competitive compared to what are the market rates.
Thank you. Sorry to interrupt, Mr. Anshul. May we request that you return to the question queue, please?
Sure. Thank you so much.
The next question is from the line of Lokesh Manik from Valum Capital. Please go ahead.
Yeah, hi, good morning to the team. A few data points I required. Yeah.
May we request that you use your handset, sir? Your audio is slightly muffled, sir.
Is this better?
No, sir, still muffled, sir.
Just one minute. Yeah, is this better now?
Yes, sir, you can go ahead.
Great. Just 3 data points from my end. One is if you can share the revenue from telereporting centers in the radiology segment, either annually or quarterly or growth rate, whatever is convenient.
So our telereporting revenue for the year and the quarter also, it's 9% on overall revenue.
Okay. And number of tests in pathology labs for the year?
So this data point is not immediately ready. You can reach out to our investor relationship, Vivek Jain. They will provide you all the information.
Sure, sure. Well, that's it from my side. Thank you so much.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead. Mr. Deepak, may we request that you unmute your line from your side, please? As there is no response, I would request that we move to the next question. The next question is from the line of Rikesh Parikh from Rockstone Capital LLP. Please go ahead.
Thanks for the opportunity. I was referring to your slide on maturity profile, where we have suggested that net blocks have been moving, how the old block we are getting 35% ROC. So just want to understand at what maturity level or what period this is denote, or how much time does it take to move to a mature block?
So typically, if you see PPP projects, take around 1 to 2 years to stabilize, and from there on, then they start moving to the mature level of centers. So by year 3, we have centers which would have matured. And this again slightly varies from a project to project, but on a broad-based level, this is how we see the performance improving over the coming years and the past trends that we witnessed.
Okay. So it will be right to assume that Punjab and Chandigarh, where we had a major investments at the time of IPO, and now they will be completing 3 years and will be going in a mature block down the line?
Yes, yes. So Punjab has already seen good growth rates coming from the last couple of quarters, and we expect that the growth momentum to continue. And now, they'll be moving towards the mature centers. And one good advantage with Punjab is also it's a pure cash kind of a PPP model where we collect cash directly from the customers.
Okay. Second thing is just from the next year on point of view, can you just throw more highlight on how much incremental growth will be coming from the radiology or pathology side for the next year in terms of deployment?
Yeah. So in terms of deployment, considering that the Assam Odisha projects are almost deployed, bearing a few sites and few locations, next year will be more on the radiology side, given the recent tender wins of CT scans and MRIs. So in this fiscal year, we expect more of implementation to be done on the radiology side.
So the next question, just to addition to it, we have seen that our depreciation have increased substantially, which is leading to a fact while we have a top line growth, the bottom line growth has not been increasing. So do we assume that it will be the same going forward in the coming year, FY25?
So typically, if you see the revenue growth, as I said earlier, with the initial implementation phases, then the revenue growth happens in a pretty significant manner, and that is what we are experiencing. That after the initial first 2 years of the project implementation, you'll see the significant growth rates, and especially with radiology, where we normally have witnessed in the past as well, the growth rates are much better, and that is what we expect in the subsequent quarters to come.
Okay, that's it from me, sir.
Thank you.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Hello, I'm audible, sir?
Yes, sir. Please go ahead, sir.
Okay, sure. Thank you so much. So just wanted to understand just the last point that you mentioned about the growth rate to be better in subsequent quarters. So if you have to look at next 2 years CAGR, so what sort of CAGR we might be looking at? I mean, 25-30% would be the rough range that we might be looking in terms of top line growth.
That is the rough range we're looking at, around 25 to 30% in the coming years.
25 to 30%. Okay, and then you mentioned your gross margin is likely to stabilize at about 78%, which is currently 74%. So do you expect your EBITDA margin also to inch up from current 25% EBITDA margin?
No, I think the EBITDA margins will stabilize at 25%. The reason being is, as I said, pathology contribution is also increasing in the overall business, and at the same time there are incremental projects getting deployed, so those costs also come in. So now we've looked at from a model perspective, and we believe 25% is a stable EBITDA margin.
Fair enough. And couple of clarification. Depreciation at 18 crores is what, because of your accounting policy changes, is likely to be the rate going forward per quarter?
Yes.
Okay. And interest cost, you mentioned this first quarter will remain higher, and then it will normalize for the entire year, right, for FY25?
Yes, we see a working capital currently is stretched, so that's why the finance cost is higher in the Q1. So it will be getting stabilized by end of Q1. So we see the further reduction in the finance cost.
Understood. And just one last thing, why our fees to hospital is such so much lower? I mean, generally we are in the range of 15 to 20 crores per quarter, but this quarter is only 9 crores. So what is the reason of that?
Yes. So as I mentioned earlier, the fees to hospital is basically revenue sharing that we have with our partners, with the business coordinators as we call them, and this is linked to certain performance obligations that they have to deliver. And since those were not met, therefore we had revision to these revenue sharing. Now they are linked to certain milestones as well as achievement of revenue in some cases, as well as certain collection, like in the case of HP, and therefore you see a dip in this quarter.
Okay. I got it. I understood. That's very helpful, sir. I think all the very best to you. Thank you so much.
Thank you.
Thank you. The next question is from the line of Amruta Deharkar Sane from Wealth Managers India Private Limited. Please go ahead.
Thank you for the opportunity. So on the balance sheet of March 24, we see that the company reported net debt of around 53 crores. So what is the kind of potential debt level by March 25?
So we'll try to maintain the existing debt levels. As we said, whatever debt was largely because of the enhanced receivables, which subsequently should go down. But also, considering the expansion, we believe the debt levels will be more or less at the same levels and may not increase.
Okay, thank you. And my second question is regarding the receivables. You said excluding HP as around 68 days. So have you started receiving money from the HP centers?
Yes. We've already started receiving money from HP centers in the month of April and May.
And how long do you expect this whole HP effect to smoothen out?
I believe it will take till the end of Q2, because the elections will get over in June, and from there on, then the process will reinitiate again. So we believe between June, July, August, we should be able to recover our receivables.
All right. Thank you.
Thank you. The next question is from the line of Ankit Pandya from InCred Asset Management. Please go ahead.
Hi, thanks for the opportunity. Am I audible?
Yes, sir, you're audible, sir. Please.
Thank you so much. Hi, Yash, sir, and hi, Pawan, sir. So on the trade receivables, the 100 crore increase we have seen YOY, is that majority or most of it coming from Himachal Pradesh, or is it some other states also where we have seen increase in receivable?
No, predominantly it is for Himachal Pradesh. As I said, and like Pawan also alluded earlier in his speech, This is largely receivables from Himachal Pradesh. There have been other receivables, but they are in the regular course of business, and we don't see any stretched receivables there. Our net receivables excluding Himachal Pradesh is about 68 days, so which is in line with our business.
Understood. And the HP receivables, as you said, to a response to the prior question, it is already starting to flow in, right? The money is already starting to flow in.
Yes.
Okay. And there is a line item on the balance sheet, other financial assets, which has gone up from 9 crores in the previous year to about 143 crores. What would this include?
So this is basically, if you see comparable years where the other financial assets non-current, which is basically a shift of fixed deposits, long-term and short-term. Nothing apart from that.
Okay, these are FDs basically. All right. So when we compute your net debt, we should take into account the other financial assets, both non-current and current, right?
Yes.
Understood. Just one last question on the margin expectation. Yash, as you said, 25% despite improvement in gross margins, which we expect from 74 to 78, maybe over 1-2 years, depending on how long it takes. So what element of your business will take up this 4%, which your gross margin will generate? Which line item do you see taking up this 4% to keep your margins at 25%?
Yeah, so see, like we've demonstrated, or you've seen in the past as well, with project implementation, there are initial employee costs which take a hit, as the project gets established or we are implementing those. Like for example, with 17 cities, again there will be manpower that will come. Hence, after seeing all those variables, we thought that 25% is a good stable level of EBITDA. Of any incremental cost that comes along because of the manpower or the consumption cost or radiology or other initial setup costs which cannot be capitalized.
And to the same point, this fees to hospitals, is it within the government business that we pay profit share to hospitals, or is it outside that?
No, this is outside. These are all private agreements that we have with business coordinators.
Understood. Thanks a lot, gentlemen, and all the best.
Thank you.
Thanks.
The next question is from the line of Vandit Dharamshri from Alpha Invesco. Please go ahead.
Thank you for the opportunity, sir, and congratulations on good growth numbers, sir. Now, I have 2-3 questions, sir. First question is, sir, I think on the last call we spoke about we will not be looking for debt per se, but I think on this call spoke that even after we get the Himachal Pradesh receivables, we will continue to maintain the debt at these levels. So any reason, sir, why we have changed our stance on debt?
No. So this debt that I was referring was more towards the working capital debt that might come up because of the enhanced, or the incremental capex that we also have to invest. For example, when we buy these equipment, there's a certain element of down payment that we have to do. So that will also add up. And hence we believe that our effort will be to reduce the debt level, and we, at a management level, we wish to continue to be a debt-free company. But considering the dynamics of the receivable management, increasing business and the working capital that is required, we believe these will be the debt levels in the future as well. Of course, our efforts will be to reduce these levels, but just based on the past experience, we believe these we will not try to go beyond these levels, but maybe maintain at these levels or lower than that.
Okay. So all of this debt will be all short-term debt, is what you're referring to?
Yes.
Okay. And so you had mentioned that for Himachal Pradesh, a large part of the receivables should start flowing in from, say, June, July, August due to elections. So would the receivable numbers actually come down in Q2 because of elections right now?
Yes. Which is what we've, there are, many of these officers are not at the respective locations. So once the elections get over and they come back to their locations and the, procedures start getting implemented in terms of, the checks and balances, we believe the money should start flowing in post the elections, which might happen in between Q1 end and Q2.
Got it, sir. And the last question from my end, what would be say, thought process of vision 5 years down the line, say for Krsnaa in the year FY29 or FY30, where do we envision ourselves, sir?
Since the last couple of years, we've tried to maintain our CAGR growth rate, and considering the current projects in hand as well as some upcoming opportunities that we see, and with the B2C vertical, we believe that we will try to maintain the same level of growth and be a leader both not only in the PPP but as well as in the B2C space and continue to be a leadership in the radiology segment as we are today.
Okay. So are you referring to say a 25% kind of a growth over the next 5 years? Because that will take us to say close to 3,000 crores kind of a number.
Yeah, that is what we are also working aggressively towards.
Okay. Okay, sir. Thank you so much. I'll come back in the queue.
Thank you.
Thank you.
The next question is from the line of Vishal Manchandana from Systematics. Please go ahead.
Hi. Thanks for the opportunity. What is the expected radiology to pathology mix over the next 2 years?
So, which will be in the range of 60-40 as the radiology projects are also under implementation as of now, so which will be deployed, and we'll see then incremental contribution from radiology. So radiology growth as well as considering the pathology, we will see next year will be in the range of 60-40.
And we should expect a similar number in FY26 too?
Yes.
Okay. And on capex, is it we'll spending 150 crores excluding Rajasthan next year, right? FY25 and FY26?
Yes.
Yes.
Okay. And including Rajasthan, what would be the capex?
So if Rajasthan comes along, again, it will be in the range of around 250 odd crores, which we'll of course see as the time comes.
So it will add about 50 crores, right, to the number?
Vishal, this is too early to comment on the Rajasthan part where the capex. Once the projects comes in, we reevaluate, and as the next quarter, we will give you update about the Rajasthan capex and other parameters once we have a clear understanding on the project.
Okay. Thank you. That's all from my side.
Thank you. The next question is from the line of Mayur Parkeria from Wealth Management. Please go ahead. Yes, Mr. Mayur, your line has been unmuted. Please go ahead.
Hello, am I audible?
Yes, sir.
Yeah, thank you for taking my questions and good morning to the management. Actually, just wanted to understand, while Rajasthan tender or the situation continues to prolong, in the meantime, we are getting orders already. Now the Maharashtra order has come. It's a decent size order with 150 crore outlay. And if the delay continues, and if we get, as you were saying, alluding that there were a couple of other opportunities in the already in the play, will it not create a financial strain if the Rajasthan order comes a little delayed, but it comes? Then we'll not be able to even come out of it, and already couple of would have been in the hand, and will it create a risk of executing on the size of the orders? As if it delays continues, and then we get let's say after 6 months, and in the meantime we get a couple of 1 or 2 large orders. How will we handle that kind of a risk?
So if you see, over the last couple of years, Krsnaa has deployed projects statewide, whether it is Punjab, Himachal, or Maharashtra. And like we mentioned earlier as well, the reason we are also increasing the bandwidth at the leadership team, we are cognizant of the fact that tomorrow we might have pathology projects of Rajasthan as well as Maharashtra coming up. So overall and direction-wise, I don't think so we see that as a challenge. In fact, Krsnaa is capable today to deliver in terms of deploying these PPP projects and taking the company to the next level. Again, from a financial standpoint as well, like we've discussed, we have initiated some of the pay-per-use model with some of our partners, and that will also help us to expand without significantly taking any debt. Again, depending on the size. Now, as I said, tomorrow if Rajasthan comes and based on what is the capital outlay, we'll take those decisions. But from all perspective, whether it is financial or the bandwidth, as well as from a team's perspective, we don't see any challenge in implementing this project as and when they come.
Okay, so that's a, sorry to say, but this is slightly overconfidence kind of situation which we sound here, because financially we are already seeing a lot of stress on the on the margins which is there. Operation in a project, PPP with a government kind of project, receivables can always get stuck here and there. It may be 6 months, 8 months situation, but those risks are inherent in the business. And if such situation comes, then there can be some risk of financial situation which may go out of hand for us. So my only urge request to the management was to while we have growth targets very aggressive in our minds, this is absolutely with the healthcare opportunity is there for 20 years in India. It is not next 3 years. While I understand the scale of opportunities may be very large, in the next 3, 4, 5 years, as the as governments understand that we need quality healthcare. But to keep that pace of expansion also in mind when we look at this, because there are many operational risks on the PPP side. I'm sure you all understand that better, but just from as we participate as a minority investors and shareholders, we would request the management to take into consideration any potential risk, because these are dealing with the governments and things can happen. So that was just a small observation and risk which I just thought that to take care of it. Secondly, if you can highlight some qualitative aspects around the B2C side which we are doing. I understand it's a small segment. We are starting to expand on that side. But if you can give us some qualitative understanding of what is happening on the business side, and which are the states where we are putting this, we have the opportunity, and how are we going about this over the next 12 months, and what are our milestones there?
Sure. First of all, I appreciate and thank you for sharing your concerns. We certainly take note of the concerns that you've highlighted. And as I said, both from at management level, we are cognizant, and considering our past experience, we are working towards how to ensure that the risk from any PPP projects does not impact the business. Now, coming to the B2C business, like we've mentioned, we are exploring B2C setup in the existing projects that we have, whether it is Maharashtra, Punjab, Assam, Odisha, where we have the lab infrastructures. In fact, in places like Assam, Odisha, we have labs which are in the not in the government premises, but in the places which are taken on rent. So these are some of the states that we would be going ahead with the B2C initiatives. At the same time, we are also expanding our test menu, the quality accreditations, like you saw, the CAP accreditation that we've achieved. So all these are done in a way where eventually it will converge that the B2C setups as well as the infrastructure could be leveraged, and hence we could foray into the B2C and create value for both our customers as well as for our stakeholders.
Okay, I appreciate. Just one small clarification. There is also an understanding that
may we request that you return to the question queue for follow-up questions, please. Thank you.
Thank you.
The next question is from the line of Piyush Jain, who's an investor. Please go ahead.
Hello. Yeah, thanks for the opportunity. I have two questions. First, I want to just understand a brief idea where our B2C business is going on. What is the current revenue mix, and what we see in the next 2 to 3 years the B2C business will have a size of the business. And second, will this have a similar type of margin, around 25-26% type of business something? And second, this fees to doctor, which is reduced from around 17% of last year to 12% something. This is a 1-year phenomena, or should we build up that this number will remain around 15 to 17% only for the future years?
So I think there were a couple of questions. I'll take it one by one. If you see the B2C revenues that we have just started off with, in terms of the various initiatives we've taken, as well as the infrastructure leveraging, we expect the B2C to be around 2 to 3% in the initial years. And of course, as the business ramps up, we'll be probably able to give much better updates. With Mitesh joining, Dr. Prashant being there, I think all considered efforts, we should see a good growth in the B2C in the years to come. Your second question was with regards to the fees to hospitals. So the fees to hospitals, basically, though it comes under the accounting convention of fees to hospital, but these are, as I said, revenue sharing arrangements with some of our business partners. and they are basically an outcome of certain performance obligations that they have to deliver. I think going forward,
will be in the range of 12 to 13%
as an overall percentage of revenue. I hope I answered your questions.
Yeah, just one follow-up on this. In the previous calls also, what we understood from you that the B2C business will have a higher pathology business. So maybe that margin side, it will be in the lower side as compared to right now we are making, because right now the radiology mix is higher. So can you just give some color on this, the B2C margin, and how much will be the pathology or radiology distribution?
Yeah, so the B2C will of course have a slightly higher share of pathology, given that is where we are trying to foray, and considering, as I mentioned, the pricing point will be slightly differentiated from our existing government pricing. So we expect the margins to be slightly better than the existing government business that we do. And hence, therefore, the impact on margins should not be significant. Having said that, in the initial period, there will be certain incremental cost, including cost of leadership, certain of the other activities that we'll have to do. But from a long-term basis, the model that we are trying to build upon will have margins which are comparable to our existing PPP business that we do.
So any store-specific number or something we have in mind, or something capex number, or this will be a same center from where we are doing right now our B2B business, or this will be a new center where the new and fresh capex will be required?
No, so we won't be deploying assets for setting up centers. We will be leveraging the existing lab infrastructure that we have. But of course, the collection centers, there's not a significant cost that is required there. It's a slightly asset-like model. I think, we'll be having better updates in the subsequent quarters once, we have Mitesh also coming in, and then we can put some more numbers to it.
Okay, fine. Thank you.
Thank you. The next question is from the line of Rikesh Parekh from Rockshot Capital LLP. Please go ahead.
Yes, thanks for the follow-on question. Sir, you had mentioned that you started a few facilities on pay-per-use. So, as a percentage, can you just quantify how much facilities you started on the pay-per-use?
No, we've just entered into some agreements on this with some of our business partners. So, as of now, these are at very initial stages. But hopefully, by Q2, we'll be able to give more meaningful numbers how this is shaping up. Hello?
Mr. Rikesh, does that answer your question? Mr. Rikesh, may I request you to unmute your line from your side?
Hello, can you hear me now?
Yes, sir.
Yeah. Sir, second is on our retail strategy. We have appointed our new CEO with a focus over there. So are we looking to aggressively expand over there, or miss any increase in marketing budget or to focus over there?
Yes. So we've been, last couple of quarters, if you see, we've been gradually studying the markets. We've seen good response, like also our chairman mentioned about it, wherein some of the initial responses were very good for our B2C, initiatives. And therefore, we now decided to go ahead on the B2C foray. We will try to keep the cost as low as possible, but there will be certain incremental costs. But as I said, at an overall company level, we'll try to ensure that our, the EBITDA numbers and the revenue numbers are intact.
Okay. Thank you. That's it from my side.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question for the day. I now hand the conference to Mr. Yash from the management for closing comments.
Sure. Thank you everyone for participating in an earnings call. If there are any unanswered questions, please feel free to reach out to our head investor relationships, Mr. Vivek Jain. Thank you and wishing you a good day ahead. Thank you.
Thank you. On behalf of JM Financial, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.